welcome back to another breakdown and let's get right into it. So first, we need to identify the direction of the market. If I look to my left, I can see that price was previously in a bearish market structure creating lower highs and lower lows. Price then had its break of the previous lower high to create a higher high and shift the structure from a bearish structure into a bullish structure, creating higher highs and higher lows. This would be our new higher high. So you can clearly see we are in a bullish market structure. Then we need to identify our impulse. This will be our impulse that consists of all green candles. Remember, the rule is our impulse needs to be all one color, followed by a retracement of at least two daily candles, and all the candles within the retracement also needs to be all one color. So here we have our impulse, our retracement, and our impulse needs to break and close above the highest point of the previous structure. So if I was to mark out the highest point of the previous structure, that would be this wick right here. And you can clearly see we have this impulse breaking and closing above the highest point of the previous structure. Then we go to the weekly. And on the weekly time frame, we want to identify our support and resistance that could be of influence. So on the weekly, you can clearly see price came off of this strong support. If I look to my left, you see price was at resistance, support, and once again using it as support. Off of this support level, we had this strong bullish candle, meaning there's possible continuation of the momentum to the upside. If I look to identify a resistance that could be of influence, that will be this one right here. There is still more room for price to go higher. So it came off of this support. The next resistance that could be of influence is this level right here. But price isn't at that level yet. So there's still more room to continue to the upside. If I go back to the daily, where I will be drawing my fib in the opposite direction of the retracement, so from the end to the beginning, because we predict that this new impulse will travel at least to the negative 27 before having its retracement. Then we go to the 4 hour, and on the 4 hour, we will be waiting until we have the break of the 61 level. As soon as we have the break of the 61 level, we can now place our order on the 61 level, or stop loss on the 88, and our take profit on the negative 27 to create at least a 1 to 3 risk to reward. Now, if you look closely, you can see the end of this push is all the way down here. So here is the structural low, followed by the impulse that broke the 61. If you want to be protected by this structural low right here, you should adjust your entry and your stop loss. The take profit always stays on the negative 27. The only thing that you can adjust is your entry and your stop loss. So in this case, my stop loss is going to be beneath the 100 level, and my entry is going to be between the 61 and the 88 to create at least a 1 to 3. So right now, we're waiting until we get tagged inside of this trade. As you can see, we have now been tagged inside of this trade. You see it's still a 1 to 3. And as soon as price breaks and close above the 38 level, we can now move our stop loss to break even, and it now becomes a risk-free trade. So we're going to play it forward, and as you can see, our take profit has been smashed. So this was the 1 to 3 on USD JPY. If you want to learn the strategy, you can click on the link for the course in the description. Peace.